So since the beginning of this year, 2025, I spent over $36,000 on two individual stocks. And I'm not trying to hack the algorithm and keep it until the end of this video, even though it is appreciated if you keep on watching. But let me tell you which those stocks are. It's Google and Amazon. But in this video, I'm going to tell you why I initially started investing into those companies, as well as why I'll continue doing just that going forward. Now, quick background story about me. If you haven't been watching my channel before, my name is Kai. I used to be a luxury hotel 5-star general manager. And then around 2 years ago, started my own business, went all in YouTube and other online business endeavors. But when I first started investing many years ago, I, like many, just followed the herd, whatever I read online or people told me to buy, and bought some random stocks. Some of them did well, most of them didn't. Then I shifted to dividend investing. It was really appealing to me and I liked the idea of it. And it worked well until it didn't. And I realized for me, it's very important, the total return. Now, dividends are great, but if the overall return you get from your money isn't as high as I would get otherwise with some other investments, I just didn't see the appeal of just getting dividends while the company price share went sideways or even dropped in some cases. So the total return turned out to be less than I would be getting in the markets. And talking about the markets, that's when I eventually shifted into ETF investing, going all in the S&P 500. I still have that. It's actually one of my biggest positions in the portfolio. I still love it and recommend it for most people. Also have the NASDAQ 100. So I said, if you can't beat them, join them. Until recently, when I thought, why not to start dabbling around again with a few companies where I really have conviction in? And that's the change, right? From many years ago when I started just buying whatever somebody told me to buy, now I really do my homework and want to understand the companies that I'm investing in. And yeah, I really spend a lot of time. And after all that research, I came up with two companies that I really understand and see the long-term potential in. And those are exactly Google and Amazon. Now, I was thinking at some stage to add some other companies, but I just couldn't find enough reasons for me to be really convinced. Because why I think conviction is so important. Because even if any of those two companies would drop by 10, 20, even 30%, honestly, I would see it as a good thing because I can acquire more stock in that company. While if you buy a company where you don't have conviction in, and those companies do drop, which all of them will eventually, right? That's just normal, right? Stocks are cyclical. Then you might panic sell out of them. And I don't want to be in a position. And with those two stocks, I really think that the upside is strong, while the downside, the price correction to the bottom, in my eyes, is much more limited. So the swings, I think, are more stronger towards the upside than the downside because they're so strongly diversified. So we'll go into each of those, but I'm going to show you what I mean by diversification. I want to have a company that has many different business avenues. So even if one kind of starts falling or doesn't produce the results anymore that they did in the past, you have other legs to stand on. And for me, as an investor, that's very important. So here you see in my portfolio, my two individual stock holdings, Amazon and Alphabet. And actually, I only started investing into them, as I said, since the beginning of the year. Now, I wish I would have bought them much earlier, of course, like we always do, right? I also would have wished I bought Bitcoin earlier, but hey, it is what it is. Even though I invested only this year, I'm already up over 4,000, which honestly, I'm really happy with, right? The major gains here coming from Google, which is my most recent addition. You can see here my most recent buys, and the first one was only in the middle of June. So again, I wish I would have bought way earlier, where Google really didn't get any love for a while. And yeah, you can see I've been really riding the wave up, the price up, which is the whole point of dollar cost averaging. The same way what I did with my ETFs and Bitcoin, I will continue buying on the way up and on the way down. I'm not trying to time the market, right? Because again, maybe it's a peak right now, it will reset a little bit, that's fine, or it will continue. Then I wish I would be buying at those prices because in a year from now, they might be seen as really cheap, right? So nobody knows the future of it. That's why I'll continue dollar cost averaging into companies, once again, where I have conviction in, which I certainly do with Google. And if you remember why it was so down for a while, it was obviously a big reason because everybody thought with AI taking over, ChatGPT, Perplexity, all of them, they're going to be eating Google's lunch, right? They're going to completely displace Google search, which is one of their biggest business revenues. Plus, there was a potential court ruling looming in the air where there was talks that Google might have to spin off and sell their Chrome browser, which of course would be a huge detrimental impact to their overall business income. Right, and here you can see basically where I hold Google because I buy it on different brokers. Now I use many different brokers because obviously I also review stockbrokers almost for a living, you could say. So you may not want to have that many brokers, but I always recommend at least two. I think that's a good practice to have. In my case, I have it in 4 different brokers. You can see on eToro is my biggest holding. I have some on Trading212, some on Interactive Brokers, and my most recent addition on XTB, and all of them in the plus. So I'm really happy. Honestly, it has done extremely well. Obviously, the main catalyst came once the ruling was turned down, so Google didn't have to sell their Chrome browser. That was a big relief for investors, and it really took off. You can see here, over the last 3 months, we are up by 34.5%. So really incredible returns, which previously Google didn't get any love. It was one of the magnificent 7 companies, right? The big 7 tech companies in the US that was really well undervalued, underpriced, and those who believed in it all along, well, they really reaped those benefits. And by the way, guys, this tool I'm showing you today is called Snowball Analytics. Started using it recently. I absolutely love it. It's really such a powerful tool. I have all my various brokers in one dashboard over here. I can individually select them. You can see my dividends coming in by every single day, how much I earn in a month, in a year, upcoming. You can even set up your goal of what number you want to be hitting in your portfolio, and then it will predict how long it will take you to get there. Now, technically, you could also be tracking your real estate here if you wanted to. I choose not to, but I do have my P2P platform, my crypto, my stocks, ETFs. You can also compare your performance versus other benchmarks like S&P 500 or select from other benchmarks where you want to see how you're doing relative to them. They also have a nice app on the phones. And since I use the platform for myself and I'm all about transparency and sharing my own journey as an investor, my wins and my losses, I want to transparently share my portfolio also with you. So if you're interested, either scan the QR code on the screen or see the link in the description down below, enter your email detail, and I will send you an email with a private link where you can see my full portfolio in real time, updated whenever I make any trades. But jumping over to Seeking Alpha a little bit more on Google, look at the performance over 1 year, up almost 60%, absolutely mind-boggling. For me, always interesting to look at the short interest, now sitting at 1.02%, so very, very little. Hardly anyone is betting against Google in the long term, right? That's really good to see. If you have a short interest of over 4 or 5%, that means quite a few investors are actively betting against the company. Market cap currently just over 3 trillion. And that currently places Google as the 4th most valuable company in the world, just behind Microsoft, Apple, and Nvidia, but also slightly ahead or quite a bit ahead of Amazon. Quite a big gap in terms of valuations, and then followed by some other companies over here. And really cool, back on Snowball Analytics, you can also see why it's moving. So they always give you some snippet of information, AI generated, what's happening, why stock is up or down. In this case, Alphabet shares are trading higher because Anthropic, who is behind Claude, which is amazing AI, one of my favorite AI tools out there, said they will be expanding the use of Google Cloud technologies, including up to 1 million TPU. So again, that's obviously a very positive sentiment towards Alphabet. At the same time though, if we go back a few days, you see over here when OpenAI came out with their own new agentic browser, right, which they call Atlas, people thought Google should be really dropping a lot because everybody will rush to using OpenAI's browser. Well, in reality, it didn't actually happen, at least not yet. So the stock didn't really take a beating. So that's also a nice overview. You see, what's positive, what's negative news. So you can kind of filter quickly what's happening with a given company. If we go to the financials over here, I'm always happy to see a company growing their top line. That's most important. Now, obviously, profitability is equally important in a way, but you want to see a company that continues to grow their business. Once you start seeing stalling business and revenues, that's when you usually start to see some red flags creeping up. But there, Google has been continuously growing their top line, which is awesome to see. And the same with the net income over here. And if you compare it to the S&P 500 over a 5-year period, the total returns. So that's the price return, which we get from the actual share price appreciation over time, plus the dividends. And yes, Google also pays a small, tiny dividend, but they do. You can see it that it basically outperformed the S&P 500 by a factor of 2. I mean, doubled the returns within 5 years from 115 to 230. Unbelievable. And of course, the biggest gains came from the last, few months, so to say. So I was lucky to catch that wave over here. It wasn't particularly genius market timing. I just felt that Google was really undervalued at the time. It still is in many ways with a PE of 26. I still think we have a long way to go there. And yeah, as I mentioned, I do pay a dividend, but it's tiny at 0.32%. So if you're a heavy dividend investor, you wouldn't buy Google for the dividends. But since I'm a growth investor in a way, for me, it's a nice little cash perk that I get every quarter whenever they pay out the dividend. And if we jump over to Interactive Brokers, one of my favorite stockbrokers, we can go over here into the stock analysis. I recently made a video about this because there's so many insights which other platforms charge you for it. You can see all those various insights over here. Really incredible. But something really interesting is investment themes. And then I want to click on brand and product. And here you have basically a whole list of all the various business sectors. And that's honestly one of the biggest reasons why I'm so excited about Google as a company. Now, everybody knows Google from search, right? Search, Chrome, maybe Google Cloud, Gmail, a couple of things. But actually, Google has so many other businesses that they really monetize and brings major income to them. Now, YouTube alone, right? You could think about YouTube like a real Netflix competitor. In the future, I think it might be more valuable than Netflix, right? Because let's be honest, everybody's watching YouTube one way or the other, on their phone, on the go, more and more on the TV at home. So I think it's really going to be the future. They're going to start licensing other content, international sports, what have you. So everybody is on YouTube. So that alone is a huge business driver in my eyes. And then you see all the various other business verticals that they have over here: Google Ads, Google Play, Google Maps, Waymo. For me, one of the most exciting business venture that is coming up for them. I generally think they're way ahead of Tesla self-driving taxis. In the US, they're absolutely dominating, and now they're entering actually London for the first time. So I think we're going to see it more and more even roll out into Europe. And I don't know about you, honestly, I would pay even premium to ride in such a car than in some smelly Uber where the guy is grumpy, had a bad day. So here, honestly, the cars, from what I've seen, the experience, super sleek. There's no person inside. Absolutely love it. And I think that's going to be the future, right? There's going to be other competitors, no doubt about it. But I think they're going to take a major market share, first mover advantage. So that alone could be a huge business by itself, right? For example, Tesla, a lot of people, value Tesla so highly purely because of the self-driving capabilities. So if you were to apply the same logic here on Google with Waymo, for example, well, you should also add a way higher market premium on top of it. And of course, we shouldn't be forgetting about Google Cloud, one of the biggest revenue drivers as well. So many different business avenues and sectors, which, as I said, I really love. Even if one of them was to drop, let's say Google Search, which may or may not happen, I don't know. Let's not forget they also have Gemini, which they start baking into all the various tools. So I think it's a smart way to go about it. If you haven't tried Google Gemini in recent times, it's actually really good. In the beginning, they were way behind ChatGPT, but now they caught up in many ways, actually doing even better with their nano banana image generation and so forth. So I think they're really doing a great job with the AI department and catching up nicely. So honestly speaking, despite the recent price hike of Google, I'm still super bullish on the company long term. I think they're doing so many things right. And as I said, the downside in my eyes is very limited. Maybe search will disappear one day. It may or may not happen, but I'm really confident with all the various other business sectors that I do have, that long term, they're going to have a stronger upside than a rather limited downside. That's why I'll continue investing into them. It's not that I buy it every single week. I see when I have some buying opportunities here and there, but generally, I definitely want to increase my position into the company. And by the way, guys, huge shout out to Joseph Carlson, one of my favorite YouTubers, especially in the finance niche, one of the smartest, well-spoken guys out there, who's also an investor into Google and Amazon. So I'll definitely take some of his thoughts as well, but he has also some other holdings, but really amazing videos. So I can definitely recommend you to check his channel out as well. Right, with this, we move on to my second stock and holding, and that's Amazon. Now that I started buying a little bit earlier, that was back in, what was that? February this year. So that was my first buy. And since then, really dollar cost averaged over time. My way down, that was really nice. So I got better and better prices and then riding the wave up a little bit. Unfortunately, over time, Amazon hasn't really done that well, which once again also makes me extremely excited about the company, because unlike Google, I think Amazon didn't have their big moment yet. Out of all the Magnificent Seven, Amazon definitely performed the poorest out of them. Look at that. Year to date, we basically only gained 2.2%. And looking at the total returns, even though Amazon does not pay a dividend, but the S&P 500 does, over a 1 year period, we're still neck to neck with the S&P, but over a 5 year period also, it really underperformed. But another good thing though is the short interest, once again, very little, less than 1%. That's always nice to see. People are not really betting against it. And I genuinely think the stock is about to break out anytime soon. Maybe it takes another few months, maybe a year, maybe two, but I think there's so much strong momentum riding on that company. And they're obviously reinvesting a lot of their money into new business avenues. When we go back over to Interactive Brokers, you see here, the various brands and products that they're offering. AWS, right? One of the biggest cloud, if not by now, the biggest cloud provider in the world, together obviously with Microsoft and Google. Those are the top three hyperscalers, AI hyperscalers and cloud providers. AWS definitely leading from the front. We have Amazon Prime, the delivery, but also Prime Video, right? A real competitor to Netflix, Disney, Hulu, all these big streaming providers. I think more and more people are naturally drawn to Prime membership. With this comes the Prime Video. So I think there's a huge avenue for them as well. Amazon Bedrock, the AI services, advertising, more and more, they're catching up to be one of the biggest advertising platforms in the world for people advertising on Amazon directly, right? To rank better and sell more. That's a huge business for them as well. Things like Alexa, even IMDb, the movie database, it has been bought by Amazon, which only makes sense because then they can integrate with Prime Video. So it's really nice ecosystem that they're building up over there. Amazon Fresh, etc. And one of the projects that I'm so excited about Amazon, equally as I was with Waymo for Google, here it's a Project Kuiper, which is going to be the biggest competitor to Starbucks. Starlink, of course. And I think it's well needed, right? Because Starlink has such a monopoly in a way with having, satellite internet around the world for people. So I think we really need that. So once Amazon enters the game, I think over time they will become even more cost efficient. More people will flock to it. I think it will give them such a leg up to any other competitor and just builds up once again that ecosystem, which I love. I love ecosystems, right? The same what Google created over time with all their free tools, Gmail, Calendar, what have you. The same what Apple did over time. For me, it's really nice to see Amazon pursuing that. And Project Kuiper is going to be yet another piece of that puzzle to get to that really holistic ecosystem. And I haven't even talked much about that yet. So I generally think it hasn't really been priced in that much yet once again. So that's why I'm saying the big breakout moment is yet to happen, in my opinion at least. I even forgot Twitch, right? For all the gamers out there, Twitch is also owned by Amazon, right? So even if one of those business avenues was to go down, well, then another one will pick it up and others might even outgrow that even more. And let's not forget about one of the biggest benefits coming to Amazon very soon, as they plan to replace more than 500,000 workers with robots in the future. Imagine all the logistics, right? Their warehouses around the world require so much manpower. So they're investing heavily into robotics. So they might actually be one of the leading robotics companies in the world, once again competing with the likes of Tesla and so forth. And once they roll that out, worldwide, they're going to be saving so much on payroll, which I think will absolutely skyrocket their profits. And it will obviously very positively impact the share price over the long term. Even things like drone delivery in the future might save them so much money that they previously spent on expensive delivery, which I generally think is going to happen in Dubai. It's already happening in some parts, other parts of the world as well. So I think it's not even that far in the future. And actually one more thing I forgot to mention, you see, that's why I love the company, because they have so many different business avenues. And that's actually called Zoox, another self-driving car competitor to Tesla and Waymo. They started trialing it out now in the US and has been really received really well. You can see how it looks quite unique. There's no more driving wheel and so forth. So you call it with the app, very nice experience. So once they roll this out further and further, you can imagine also having self-driving delivery trucks, right? And then maybe little robots that jump out from the back, deliver a parcel to the house, and then go back into the car, once again saving them so much payroll and costs overall. So I think once they start rolling out AI, automation, and robots, this will really scale their revenues, but also their profits by a huge multiple, which gets me so excited about the company. The growing revenues year on year, so is the net income. And that's why I'm genuinely thinking, so far we haven't seen a real breakout over here, and we're due to see one. It's going to happen eventually. I don't know when, but until it does, I will continue buying the stock. And that's why I'm really excited and have full conviction in it. Now, of course, friends, none of this is financial advice or buying recommendations. I'm just sharing with you my thoughts, my own portfolio. Ultimately, it's your money, your decisions, so please do your own homework. Well, there you have it, friends. My 2 stocks, why I bought them, why I continue buying them. What about you? Are you buying the same stocks? Anything different? Let me know in the comments down below. Happy to hear from you. Next up, check this video here. As always, thanks for watching. Stay healthy, get wealthy. See you in the next one. Ciao.